Hey guys, welcome back. In this video, we are talking about the 4.8 million shares gone, 808 asking price, the $40 target, and many more in this video. First, we're taking a look at this. 9 out of each 10 AMC shares are traded in dark pools. Only one share hits the market, meaning only that one share will have an impact on the price of AMC. Now, what's even more important is knowing that the majority of the shares of the volume that's happening for AMC are indeed buy volumes. So most times, often what happens is 9 of these shares are buy order and the only one share is a sell order, but only that one share actually hits the market and have an effect on AMC. When you take a look at the peer benchmark, so these are same industry, doing the same thing within the industry. We're looking at AMC and we're looking at Cinemark. AMC, we're seeing 87% spiking to 90% on some days. For Cinemark, we're looking at 38.86%. And we covered this briefly the other day, but you can even see here on Friday, last Friday, off-exchange trading hits 87.17% of AMC's 18.57 million shares, peaking near 89.5%. Now, when you take a look at the comparison, Cinemark's 38.86 of exchange volume. So people often make the comparison between how Cinemark price is going up and AMC is going down, and they label AMC as a bad company. Now, what they fail to say is the fact that Cinemark is only seeing 38.86% and AMC is hitting 89.5%. And not to mention, like we've said earlier, most of these orders are in fact buy orders. So if we were to see the same sort of dark pool usage, 38.86% for both AMC and Cinemark, we highly expect AMC to go up even higher. And of course, actually seeing real price discovery. And so this is what we've said with, yes, there are dark pool used for other stocks as well. But when you talk about the difference in between the dark pool usage, that's the thing you have to realize. And the example given here, 9 out of each 10 AMC shares are traded in dark pools. That just goes to show how much price is actually being hidden, how much volume is being hidden. And you can see dark pools internalization route most AMC retail buys away from lit market. So already here, we're talking about their routing retail buys away from the lit market. And we already know that the majority of apes, we have done a survey on this as well. We've seen the data on this as well. The majority of apes are either holding on to their existing shares or buying more on top of what they have. Only a very small percentage, not to say there isn't any, but only a small percentage of apes have sold some shares or completely sold their shares. And so when the fact that the dark pool is used to being targeting retail buys, that is what we have to realize. And that's how AMC is always getting manipulated and suppressed, because we're seeing things like this. And you can even see here for the asking price for the shares borrowed. Let me get this straight. Even after borrowing 4.8 million shares, they still need to direct all orders to dark pools. So not only have we just talked about 9 out of 10s, majority of retail buys are being routed to dark pools, they're also borrowing an extreme large amount of shares. You can see we started AMC off with 4.8 million. It went down to as low as 15,000 before going up to that 400,000. So firstly, we have to realize is that the amount of shares that are available to borrow right now. And there are two reasons for this. Firstly, we've said is that very likely in the past before, we have identified these as synthetics being created, which are then injected into the flow, allowing these institutions to borrow and short AMC. But recently, because of what has been going on, there could be a new reason, which is we've seen actually how much institutions have been buying AMC. And so it wouldn't surprise us to see that these institutions who have bought in tens of millions, hundreds of millions of dollars of AMC shares to start actually lending these shares out. We've seen Vanguard increasing their positions, and we know that Vanguard is someone who's likely to borrow or to lend these shares out. And so that could be a reason why. And so the very fact we are looking at 4.9 million shares and over 4.5 million shares being borrowed, it shows the suppression that's going on. So here we can see from the shares to borrow, the suppression that's happening for AMC. From the dark pool usage, we can see the manipulation that's being used to, again, change the price of AMC to not allow us to actually see real price discovery. And it doesn't stop there, because then you start to see these glitches like this here, where we're looking at 808.47 ask for AMC. You can see the bid price is 1.2, the ask is 808 with an 807.27 spread. Now, one thing we have to note here is that retail investors do not have the ability to set their ask price at this high, at 808. So this is something that's actually done by the institutions. And so why are institutions setting it at 808? And why do we always see these price glitches happen for AMC, for GME? Again, there has been so many times this has happened, and there is always during times where there's extreme volatility, where we're seeing these hedge funds, the very hedge funds who are shorting AMC, but are also being affected by the volatility. When we see these things all linked together, we start to see the price glitches happen. And this is what we've said with how we know that off the counter, these guys are trading AMC at a large price. We know that AMC should be worth 100x where it is right now. And the shorts know that as well. And that's why they're worried, because they know that even when AMC goes to $500, potentially a lot of apes are not going to sell, because apes are willing to hold on to their shares into the thousands, into tens of thousands. And that's what they are afraid of. But for the shorts who are desperate, it seems that they are already paying this much, or they are trying to benefit from this as well. And so that's something that we have to obviously know. And I want to talk about this. AMC bankruptcy is off the table, and Ape still owns 90% plus of real shares. Shorts have a serious problem. So just like we've said, yes, the institution ownership allegedly has gone past 50% for AMC. But we know that that's not the case, because we've seen that the apes who have been with us from the very start have not only not sold their shares, but we've seen them actually increase their shares, along with the welcoming of even more new apes that have bought AMC shares. So we know that we own the majority of the shares. Now, that is why shorts firstly have a problem, because they don't have access to real shares of AMC. They are borrowing these synthetics, they're buying these synthetics, and by them buying these synthetics, they're forcing the shorts, they're forcing the market makers to rehypothecate more shares. And we've talked about how that's only going to apply more pressure to their capital, to their margin, and increase the floor price of AMC. It's why we've said that every time there are collateral and volatility problems, we're seeing these shorts actually being affected. And now to talk about the bankruptcy, to talk about the financial situation of AMC, AMC announced this afternoon receiving a commitment letter from Deutsche Bank to finance new AMC 10.5% debt due in 2031. If consummated, it would be used to pay off 12.75% debt on our Odeon subsidiary currently due in 2027. Now, this is obviously good news. This is what we talked about with the restructuring of the debt, how AMC is moving forward. Yes, there are still areas to be working on. Like we've always said, we have to look at this as non-biased as possible. And so there are always areas to improve on. But the people who said that AMC has not made a single improvement, the people who said AMC has not moved forward and are still being affected by the problems of the past, they are clearly not taking these points. And we can see AMC just locked in 425 million new credit facility, refinancing 12.75% debt, new loan at 10.5, maturity extended to 2031. Lower interest, longer runway, stronger balance sheet. And that's the position that we are at right now. The maths keeps improving. Bearing in mind is that if at 10.5%, we have the ability to save up to 10 million every single year. Now that 10 million is obviously going to be used wherever it's more investments into other assets or into improving the infrastructures. Both things we have seen them do extremely well. We've already talked about the HYMC investment that AMC has made, which has already yielded them a great return. We talked about how AMC is spending money into creating premium theaters, which has increased their revenue. And so you can see by how saving cash, we are allowed to be in a better position. Now, from the technicals, and this is something I want to quickly mention, but because of what's going on right now, you can see, look at those gaps setting up. Next gap is $12, $20, and $40. What's your price target for first short squeeze? So the price target here, the $12, $20, and $40, these are obviously short squeeze price targets. These are where we think AMC should be going naturally because of everything that they have done. And it's why we've said that right now, with everything that's going on, with the fact we're seeing 4.8 million shares being borrowed, the fact we're seeing 808 asking prices on the data, it wouldn't surprise us to see AMC go to $40 because we've seen in the past how easy it is for AMC to do. And especially if we were not seeing a 90% dark pool, we know how easily it is for the volume to be buy volume to push the price of AMC up higher, because apes have done that in the past before. But every time we've done that, we've been met with two things. The dark pool, as per usual, like we've talked about, but also the extreme halts. Many of you will still remember when AMC was halted more than 10 times in a single day, and that was when AMC was going up. Now, when AMC has gone down, we have never seen it being halted for going down, and so it's why we said that the regulations aren't here to help the retail, but rather the institutions. Furthermore, the battle for 110 in AMC was 4-1. Support held, volume stepped in, ape still here. And it's why we've said, whilst the technical analysis, because we know we're being suppressed, because we know we're being manipulated, we don't use it as the golden thing to determine where AMC is going. However, we are able to use it to find out data which we can use, which is understanding that apes are still here, apes are willing to buy, and that we're fighting back against these short sellers. And that's the biggest takeaway from things like this. We're also looking at this right now. GME coin is $5 billion per coin. When it comes to AMC or GME, my lowest price point is $750,000 per share. However, during the squeeze, the price can go to infinity. And so is what we're looking at here. Now, the very fact that these coins still exist should already tell you about what's going on, but it also highlights, just like Joshua has said here, what apes think of the squeeze price. It's why I said $12, $20, and $40. These are all very simple things for AMC. These are things that should be reached even without a squeeze, just by normal price action. But when we talk about why short sellers are worried, why short sellers are extremely scared, is because they know they will be bankrupted the moment they let AMC go up, because apes are not willing to sell their shares at the prices they want them to. Now, GME warrants FTDs are rising, short volume increasing. We're seeing the short position happening for the warrants of GME already. This at a time where we're seeing still extreme volatility for GME in terms of the acquisition rumors. Now, not only that, we also see that GME short interest was reported at 140% of float on January 22, 2021. Now, this was something that we've seen in the past before. And the reason why I want to mention this now is because this was what we saw at Jan 22 of 2021. And we have never seen those numbers actually being wiped. And so the short interest is even higher than this. And so it's why we're then seeing things like short interest increase for the GME warrants as well. It's because data like this of the past, they still exist to this very day. And so it's why we have to pay attention to obviously what's going on. Now, furthermore, is why we're talking about volatility, is why we're saying that currently all of these hedge funds, market makers are facing problems. Firstly, the Japan's Nikkei stock index plunges more than 4,000 points, which is 7.2%, making one of the largest drops in its history. Now, that's already a big thing. And just like we've said with collaterals, these hedge funds, these market makers, they're dependent on these assets to go up in prices for them to then borrow money out to short AMC. They use this with, again, foreign indexes like Nikkei stock. They use this with big tech stocks in the US as well. And so when we see these things happen is why we're seeing them panicking on AMC. We're also looking at oil prices to be having massive volatility. We can see that oil prices went up to $120 today, is now sitting around $100, but you can see the volatility that's going on right now. You can see it surged to 18% to $110 in the first 10 minutes of trading. That's just talk about the volatility. And at moments like this, where we're seeing extreme volatility, you have to remember these big hedge funds who are involved with this are seeing their capital wherever it's getting wiped or seeing a margin requirement going up. And this is potentially going to last because whilst the largest oil company, Saudi Aramco, cuts production at 2 oil fields. And so potentially this is only going to continue and stop the prices and make it even more volatile than it is right now. Another thing, JP Morgan has said that the S&P 500 could fall by 10%. Just like earlier with what we've said with the Nikkei stock, how it has an effect, things like this for the S&P will have an even bigger effect because there is more money involved, but also most of the capital used by these hedge funds are in the S&P. And so this is just another thing to be watching out for as we see these short sellers struggle. Now, as always, on this financial advice, do take advice as a grain of salt. Make sure you do your own due diligence and research, and I'll catch you guys next time.